Money FM 89.3. Best of breakfast. Companies to watch.
Yes, lots to talk about when it comes to companies, and we've got Dan Koh to help us out today. Good morning, Dan. How are you doing?
Good morning, Ryan. Very good today. It's Friday. Looking forward to the weekend, and we've got lots to break down, so let's jump right into Companies to Watch, a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're going to look at market trends and risks that might be overlooked and hidden gems and warning signs to steer clear of. So be part of the conversation. 88550893 and tell us whether you think it's gonna be hot or not. Okay, Ryan, you ready for today's edition?
Let's go.
Now, Ryan, you've got kids, and like many parents, you've probably got to keep them busy with toys, cartoons. What comes to your mind when you think of content for kids?
Yeah, the biggest brand out there, Disney.
Ah, you read my notes, is it?
I've been to Disney theme parks as well.
Yeah.
And
Are you a fan?
I'm a fan. I've been there more than once, and it's one of those places you want to bring your kid eventually as well.
Yeah.
And it just transports you to a different place. And with all the products as well, they resell that story to make you buy even more stuff.
Certainly, and that's a reason why it's known as one of the happiest places on earth, because for the past 100 years, the Walt Disney Studios has been the foundation of which the Walt Disney Company was built, and it brings quality movies, great storytelling, and stage plays to consumers throughout the world. So think, Walt Disney Animation Studios, 20th Century Studios, Pixar Animation Studios. You get
crazy to think the size of how much they've become. They own The Simpsons because of the acquisition of Fox, and they own the X-Men because of their Marvel acquisition. They are huge.
Exactly, and huge is what they are, because it looks like Disney's bringing back the magic to investors with their latest financial results. They posted fiscal first quarter earnings on Wednesday that beat top and bottom lines, and Disney's box office success pretty much helped lift the company's results during the quarter. The debut of Moana 2 over Thanksgiving weekend, that helped to push the box office to new heights. Have you watched it, Ryan?
No. Have you?
I think I only watched the first one. Yeah, I don't remember watching the second.
It's on the to-do list.
It is on the to-do list. And on top of that, Disney also dominated the box office in 2024 with the help of other films like Marvel's Deadpool and Wolverine and Pixar's Inside Out 2. I'm assuming you watched that one, right?
I've watched Inside Out 2. It is pretty good.
Yeah. Oh, Inside Out 2. I was thinking Deadpool and Wolverine. I forgot you had a kid, right? Okay. Now, excluding some items, earnings rose to $1.76 a share. That's beating analysts' estimates. Revenue also came up slightly above expectations, increasing 5%, and Disney's net income increased nearly 23% as well. So, meanwhile, the company saw revenue gains across the board for its entertainment, sports, and experience segment. In its sports segment, Disney's ESPN reported revenue growth of 8% year over year and operating income that was up 15% from the prior year period. So overall, it does seem like Disney is bringing great news and the magic back into investors' lives. But here's the caveat, Ryan. It also marked the beginning of expected streaming subscriber losses at Disney Plus, because the company's streaming business reported another quarter of profitability despite a 1% decline in subscribers for Disney Plus, the flagship service. So while domestic subscriptions for the platform increased about 1%, international numbers declined by about 2%. Were you one of them?
I still have my subscription, but I think a lot of people are more conscious of what they're spending on, and especially with prices these days, you might want to cut back. I think that's what we're seeing here, subscribers cutting back, especially with the price hikes we saw from Disney's streaming service.
Yeah, so in its most recent forecast as well, it is also expecting another modest decline in light of, rising prices, and the slowdown in streaming subscriber growth follows an increase in its prices for its services last year. So if you look at it, Disney Plus average monthly revenue per paid subscriber had increased roughly about 4% to $7.99.
So net, it was a good move for them to raise prices. They made more money.
They did technically make more money, even though they lost some subscribers. So technically, that kind of cover up for the loss they made. So Disney reiterated its forecast for high single-digit growth in its adjusted earnings in its fiscal 2025. And as previously said, it sees double-digit growth increases for both 2026 and 2027. So the management executives, they're not afraid of over-delivering. And it's encouraging to know as well that the company recently repurchased about $794 million worth of stock in the quarter and plans to buy back another $3 billion worth of shares in fiscal 2025.
Yeah, talking about not afraid. They're also not afraid of tariffs, apparently.
They are not afraid of tariffs, in fact, because apparently it's immaterial to them. We're talking about the Mexico and Canada, as well as the 10% levy already in place on China. So all in all, Disney looks poised to succeed in this year. So the verdict for me, Ryan, the magic goes on. I'm going to go with hot. What about you?
I will go with hot as well, but I'm just a bit cautious with how things are going. Prices are going up. I'm not sure how much more they can continue with that.
That sounds like tip ranks to me because based on your consensus forecast, they're going with a neutral.
Okay.
But with Yahoo and Barron's, they're giving it as of 7 February. Wow, I fast-forwarded this year so quickly. But they've given a buy rating as well. So, Ryan, that pretty much marks the end of today's episode of Companies to Watch. Before I let you go, here's a fact about Disney that you never knew.
All right, blow me away.
Now, you know that Disney World has been dubbed the happiest place on earth, right?
Uh-huh.
So it's no wonder that many people have requested it as their final resting place.
What?
In fact, the outlet's reports it's so popular that the occasion warrants its own code, HEPA cleanup. So when it happens, employees reportedly tell their guests the ride is temporarily closed due to technical difficulties. And these supposed technical difficulties is where people bring in ashes of their relatives and scatter them across the park.
Gosh, that is really interesting.
Now, this type of behavior is strictly prohibited and unlawful, and any guest caught in the act will be escorted off properly.
It's illegal.
It is illegal, okay? But
not
people still
service.
do it.
Right.
It is not a legal service, so please don't put it as your resting place. And that would pretty much do it for Disney.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.